Hello friends, let us continue with our discussion on admission of a partner. We are doing this chapter number 4, admission of a partner, and in this we were discussing about goodwill. What is goodwill? Goodwill is the reputation of the firm that has been earned by partners over a period of time. Why we are studying goodwill in admission of a partner? Because the new partner who is joining the firm is going to enjoy this reputation that has been earned by old partners. Now for that he must compensate the old partners by paying premium for goodwill, right? The new partner must be paying premium for goodwill. Then we discussed the various cases in which this premium of goodwill can be brought by new partner, like paid privately, paid in cash, retained in business, paid in kind, paid in cash and withdrawn by old partners, partially or wholly not paid by the new partner. Now we are going to do one more topic, that is relating to goodwill only. This is hidden or inferred goodwill. Inferred means implied goodwill. So this is the topic, hidden or implied goodwill. Sometimes we are not given directly the amount related to the premium for goodwill, right? Or we are not given directly that he is bringing in goodwill. Now before this I told you one thing, if you remember, if you have gone through the previous lectures, how we calculate the amount of premium to be brought in by new partner. This is total goodwill multiplied by new partner's share in profit, right? Now if we are given this amount of premium, say 30,000, but we are not given the total goodwill and we are given the total share, say 1/3. So we can calculate total goodwill. This comes out to 30,000 into 3. Clear? By taking this here. Now the same concept we will use here. See, let's see one example. We are given that there are two partners A and B, right? They are sharing the profits equally. C is admitted as the new partner for 1/4 share. The capital of A is 50,000 and capital of B is 1 lakh. Right? Further says C brings rupees 60,000 as his share of capital. Be careful, not premium for goodwill. It is given that C brings rupees 60,000 as his share for capital. Now if we have to calculate amount of share of capital by new partner, that how much share of capital he must bring, that will be total capital multiplied by share in profit, right? Like we did here, the amount of premium to be identified, total goodwill into new partner share in profit. Here also the amount of share of capital by new partner is equal to total capital into share in profit. Now what we are given is the amount of share of capital by new partner. This is 60,000. But the total capital is not given. Okay, we say total capital into his share in profit is 1/4. 1/4. So we can identify the total capital. This comes to 60,000 into 4, rupees 2,40,000. Right? Now we are given one more thing. The capital of A is 50,000, B is 1 lakh, C is 60,000. Now if I combine these, what is the total capital? If I say combined capital of all partners, this comes to 50,000 plus 1 lakh plus 60,000. This comes to rupees 2,10,000. See, as per the share brought in by new partner, the total capital of the firm should be 2,40,000. But actually the total capital is 2,10,000. That means the difference, this 30,000 difference extra brought in by new partner is premium for goodwill. So I can say goodwill is 2,40,000 minus 2,10,000. So this 30,000 is premium for goodwill. This is hidden goodwill. See, he brings 60,000 for 1/4 share capital. On the basis of that, we calculate the total capital of the firm. Then we calculate the combined capital of all the partners, including the new partner. That comes to 2,10,000. Then why this new partner is bringing 30,000 extra? That 30,000 extra is the goodwill that has been brought in by the new partner. Premium for goodwill. Right? So you can write this example. Clear? So we reach at a conclusion that how to calculate is calculate net worth. Now I am writing in accounting term. Calculate net worth on basis of new partners share. What it means? This thing. New partner brings 60,000 for his 1/4 share. Then what is the total capital? What is the total net worth? Calculate this. Less net worth of the reconstituted firm. Reconstituted firm means old partner plus new partner, right? This is what we did. Combined capital, net worth of the new firm. Old partners 50,000 and 1 lakh, new partner 60,000. The difference between the two is goodwill, hidden goodwill, that has been brought by the new partner. Now write one more thing, how to calculate net worth. What is net worth? Sundry assets minus outsiders liabilities. This sundry assets is excluding goodwill and fictitious asset. Fictitious asset means the asset which do not actually exist, like advertisement expenditure. Or there is another formula for calculating the net worth, that is capital of all partners. All partner means including the new partner, plus net accumulated profits and reserves. So these are the two ways in which we can calculate the net worth of the reconstituted firm if we are given the balance sheet. We can calculate in this way also, or we can calculate in this way also if we have the information. Right? You can write this down, friends. Calculate the net worth on the basis of the new partner's capital share. Right? Now let's see a practical problem on this. A and B are partners with the capitals of 1,60,000 and 1,20,000. They admit C as a partner on 1st April 2016 for 1/4 share in the profits of the firm. C brings 1,60,000 as his share of capital. Give journal entries on C's admission. Let's first write down the facts. They say there are two partners, A and B. What are the capitals? 1,60,000 and 1,20,000. 1,60,000 and 1,20,000. They admit C for 1/4 share and he brings 1,60,000 as capital. C is admitted for 1/4 share and he brings 1,60,000 as his share of capital. Profit sharing ratio is not given, we assume it to be equal. Right? Why? Because we read it in the very basics of partnership that in the absence of any information, the profit sharing ratio will be considered to be equal. Right? Now, we can calculate, first of all we will calculate total capital, or I can say net worth of firm on the basis of C's share. How? 1,60,000 multiplied by 4, the reciprocal of share. This comes to rupees 6,40,000. Now we see the combined capital. Combined capital of A, B and C. This is 1,60,000 plus 1,20,000 plus 1,60,000. This comes to rupees 4,40,000. Now see, the C is bringing something extra. How much? 2 lakh he is bringing extra. Why? The combined capital, it should be 4,40,000, but C is bringing 6,40,000. According to the C's share, the capital comes out to be 6,40,000. What is this 2 lakh extra? That is goodwill. So the goodwill is 6,40,000 minus 4,40,000. This comes to rupees 2 lakh. 2 lakh is the goodwill of the firm. According to the C's share, the capital of the firm should have been 6,40,000, but actually the capital of the firm is 4,40,000. This 2 lakh extra is goodwill of the firm. Now I'll say the C's share in goodwill is 2 lakh. What is his share? 1/4, rupees 50,000. Now they have asked us to pass the journal entries. The first entry will be the receipt of capital, bank account debit to seize capital account. This comes to how much? 1,60,000. Now it is nowhere given that he is bringing goodwill also, but we have the hidden goodwill which he is not bringing. He is only bringing capital. So I told you in the previous lecture that if he is not bringing his share of premium in goodwill, what we are going to do is we are going to debit the new partner's capital account with rupees 50,000, his share in goodwill, and the old partner's capital accounts will be credited because he has to compensate the old partners. We'll divide this in equal ratio because in the absence of ratio, in the absence of information, we consider it to be equally. Right? So this is the journal entry. Clear? So you can write this down, friends. Be careful, we are given that he is bringing capital only. On the basis of capital, we have the hidden goodwill. Right? So he should have brought 50,000 as his share of goodwill, which he has not brought. Right? Let's see one more practical problem. Abhay and Beena are partners in a firm. They admit Chetan as a partner with 1/4 share in the profits of the firm. Chetan brings 2 lakh as his share of capital. Value of the total assets of the firm is 5,40,000 and outside liabilities are valued at 1 lakh on that date. Give the necessary entry to record the goodwill at the time of Chetan's admission. Right? So first of all, we will calculate the net worth. Let's see. What is the net worth of firm on the basis of new partner Chetan? What is the total amount he is bringing as capital? 2 lakh. What is his share? 1/4. So the net worth will be 2 lakh multiplied by 4. This comes to rupees 8 lakh. What is the adjusted net worth of new firm. We are given assets and liabilities. I will say assets minus the liabilities, but we have to add the incoming partner's capital here, because these assets and liabilities are before this admission of a partner. So we are given the assets as 5,40,000 and liabilities as 1 lakh. And what is the share of the new partner? 2 lakh. So what is the adjusted net worth of the new firm? This comes to 4,40,000 and 2 lakh, 6,40,000. Now on the basis of Chetan's share, this capital is 8 lakh, but actually the combined capital is 6,40,000. So the remaining 1,60,000 is goodwill of firm. Clear? 8 lakh minus 6,40,000. This rupees 1,60,000 is the goodwill of the firm. Now we calculate the Chetan's share in goodwill. What is the total goodwill? 1,60,000. His share 1/4. So rupees 40,000 is Chetan's share in goodwill, which he has to pay to the old partners. So what will be the journal entry? He is not bringing goodwill, he is bringing only capital. We have identified the hidden goodwill. We have identified the amount which should be paid by Chetan to the old partners, hidden amount. So what will be the journal entry? Chetan's capital account debit. We will debit the account of the new partner, because we have to recover this amount from new partner to Abhay's capital account and to Bina's capital account. In the absence of information, we will share equally. Right? So this is how we are going to treat this hidden goodwill. We will identify the amount of hidden goodwill, we will identify the new partner's share in that hidden amount which he has to pay to the old partners. The old partners must be compensated for their sacrifice. Clear? So this is all for this lecture, friends. In the next lecture, we will do some practical problems, more practical problems on this, on hidden goodwill. We have 2-3 more problems, easy ones, nothing to worry. So we will do some practical problems on hidden goodwill in the next lecture. Thank you, friends.